Trump tariffs, how import taxes are affecting U.S. businesses. The Trump tariff dilemma, a hidden cost on American manufacturers. When President Donald Trump announces new trade policies, he often frames them as victories for American workers and businesses. But for many manufacturers, the reality is far more complex. Take the case of Josh Smith, founder of Montana Knife Co., a company that relies on imported machinery and materials. His $515,000 German grinder, essential for crafting high-quality knives. If these costs become too heavy, we could see stagnant wages, layoffs, or even plant closures. But here's where it gets controversial. Trump has framed his tariffs as a win for American workers, claiming they'll boost domestic jobs and reduce the budget deficit. Yet economists argue this narrative overlooks the broader economic consequences. For example, the artificial intelligence sector, Trump's touted future of the economy, depends heavily on imported components. Over 20% of the inputs for computer and electronics manufacturing are foreign-made, meaning tariffs could amplify the cost of building advanced tech in the U.S. The White House insists inflation isn't rising, citing a report that shows imported goods have decreased in price. But critics like Ernie Tedeschi of Yale's Budget Lab counter that import prices have actually accelerated recently. The real question is whether these tariffs will help or hurt everyday Americans, Tedeschi asks. If the average household ends up paying $2,400 more annually, is that really a victory for the economy? The controversy deepens when looking at specific industries. In swing states like Michigan and Wisconsin, over 20% of jobs are tied to sectors exposed to Trump's import taxes: manufacturing, construction, mining, and oil drilling. Meanwhile, companies like Jordan Manufacturing Co. face rising costs. Steel prices have jumped 5% to 10% this year, forcing them to pay more for raw materials even as domestic producers benefit from reduced competition. And this is the part most people miss. While Trump claims tariffs protect American workers, the reality is that businesses are being squeezed from all sides. We're getting squeezed from all sides, says Justin Johnson of Jordan Manufacturing. There's no red-blooded capitalist who isn't going to raise his prices under these circumstances. As the world economy adjusts to these new trade rules, uncertainty looms. With new tariffs in place, the question remains, will these policies truly strengthen the American economy, or are they creating a new set of challenges for workers and businesses alike? What do you think? Are these tariffs a win for America or a setback? Market slump. Trump fires labor chief amid tariff turmoil. The financial markets took a sharp hit as tariffs and disappointing jobs data collided with a high-profile firing, shaking investor confidence and raising deeper questions about economic policy, an upheaval that many say goes beyond simple numbers. But here's the catch that's stirring debate. President Donald Trump dismissed the head of the Bureau of Labor Statistics, BLS, accusing her of politicizing critical economic data without any proof. This move is sparking fierce discussions about the integrity of U.S. economic reporting and the broader implications for trust in government institutions. Here's a detailed breakdown of what unfolded and why it matters. First, the markets were unsettled by a significant sell-off in U.S. stocks. Investors reacted sharply to President Trump's announcement of sweeping tariff changes that will begin on August 7th. These new tariffs, detailed in a fresh trade policy unveiled by the White House, impact nearly every country, marking a dramatic shift away from decades of free trade toward a new era of protectionism. Many market watchers see this as a pivotal moment that could reshape global trade and economic relations. At the same time, troubling signs came from the labor market. The July jobs report, released by the Bureau of Labor Statistics, revealed that only 73,000 jobs were added, far below what economists had anticipated. Further dampening the outlook, employment figures for May and June were revised downward by a total of 258,000 jobs. These revisions are routine to some extent, since initial reports are often based on incomplete data, but the size of the changes prompted concern about the health of the job market. Then came the lightning bolt. President Trump fired Dr. Tanz. Erika McEntarfer, the commissioner of the BLS. He accused her, without providing evidence, of altering the monthly employment reports for political advantage, specifically alleging manipulation to benefit Vice President Kamala Harris during the 2024 election cycle. This drastic action has alarmed economists, politicians, and business leaders alike. The National Association for Business Economics issued a strong condemnation, calling Trump's accusations unfounded, and warning that attacks like this jeopardize the credibility of America's economic data system, which has long been trusted worldwide for its impartiality and accuracy. Dr. McEntarfer, appointed by President Biden and confirmed with strong Senate support, was regarded as a guardian of nonpartisan statistics. Her abrupt removal has led to calls from her predecessors and professional statistical organizations for a congressional investigation into the circumstances that prompted her dismissal. Former heads of the BLS stressed that the agency's data undergoes rigorous checks, and it would be virtually impossible to falsify figures without detection, due to the agency's transparent processes and thousands of employees handling different pieces of data. In the immediate aftermath, Deputy Commissioner William Wyatrowski stepped in as acting commissioner. He is a longtime career employee of the BLS who previously served in acting commissioner roles in past administrations, suggesting continuity in the agency's leadership despite the controversy. Meanwhile, the political fallout is intense. Senate Democratic leader Chuck Schumer criticized President Trump's approach, likening it to authoritarian tactics and urging him to govern like a leader. Republican Senate Majority Leader John Thune acknowledged existing public skepticism about labor statistics, but said he was still seeking a clear explanation for the firing. On the economic front, prominent economists, including Heidi Shorholtz, former chief economist at the Labor Department, called Trump's action a danger to democracy and the economy, emphasizing that reliable data underpins effective policymaking and public trust. Adding to the atmosphere of upheaval, another key figure in economic policymaking resigned. Federal Reserve Board Governor Adriana Kugler announced her departure several months before her term would end. Although the Fed did not specify reasons, President Trump claimed, without evidence, that her resignation stemmed from disagreements with Fed Chair Jerome Powell over interest rate policies. Trump's pressure campaign against Powell continued, including calls for Powell himself to resign, intensifying speculation about instability at the Federal Reserve. Stock markets worldwide reflected these tensions. U.S. indexes fell sharply, with the Dow dropping more than 500 points and major international indexes in Europe and Asia declining significantly as well. Investors reacted nervously to the combined effect of higher tariffs, economic uncertainty, and questions about the reliability of key economic data. Notably, bond markets experienced a surge as investors sought safer assets, and gold prices jumped, indicating a flight toward traditional havens. Beyond the headlines, the new tariffs are poised to impact consumers more than many realize. For example, imported wine and spirits, which make up over a third of U.S. alcohol sales, will now face increased duties, potentially raising prices for popular beverages like French wine, Scotch gin, Swedish vodka, and Mexican tequila. These changes illustrate how trade policies ripple down to everyday purchases, affecting both businesses and consumers. So what does all this mean? At its core, the firing of a nonpartisan statistical official amid controversial tariff policies and disappointing economic indicators raises fundamental questions. How much trust can people place in the government's economic data when politics may influence its presentation? Could these tariff measures, intended to protect American jobs, inadvertently slow hiring and economic growth instead? And lastly, does this episode signal a dangerous trend toward undermining independent institutions that serve as building blocks for a healthy democracy? What do you think? Is the BLS commissioner's firing a justified response to questionable data, or is it an attack on unbiased economic reporting that could harm the nation's economic stability? Are tariffs the right tool for boosting the economy, or do they risk igniting inflation and disrupting global trade? Share your views and join the conversation below. This is one debate that affects us all.